Hello, everyone. Welcome to the Friday session for the Fintech Track presented by Invesco. I think this session is one of the most expected sessions because we are going to talk about Fintech Track.
Hello, everyone.
Welcome. We are going to have a great... Sorry about that. I didn't realize I had the other window open. But what I was saying that we are expecting such a great conversation because we are going to talk about fintech trends. This year has definitely been a different year. And I want to introduce you to our first panelist. His name is Donny Lochan. He is the Chief Technology Officer at Invesco, and we're also going to have Dave and Tiago, but I wonder if they can talk more about themselves.
Great, thank you. So thanks for the introduction. As said, my name is Donny Lochan. I'm the Chief Technology Officer for Invesco. Has a number of different hats in that. One is what I call more traditional technology. The other is an area more on innovation and working with startups in the fintech world. And then I'm also a member of Engage here in Atlanta, which is a local corporate incubator, quite unique. I'll let Diego take a little bit more context on that, but it really is a unique setup that we have here in Atlanta. So very pleased to be here. Thank you.
So, hi everyone. My name's Tiago Olson, and I'm over at Tech Square Ventures. And Tech Square Ventures is kind of an early stage venture capital firm based right here in Atlanta. And we're also the fund manager of Engage Ventures. So a little bit about Engage. We have 11 Fortune 500 partners and LPs that are a part, and we kind of pull that capital and turn around and invest in emerging startups and tech companies that we think we can really accelerate and connect with some of the largest companies, including in Invesco, that can help with scale and distribution and things that early stage companies generally all need. So happy to be here.
I'm Dave Dowsett. I'm at Invesco as well. I've been in Atlanta now for about 3 years. I look after all of our emerging tech, intentional innovation, data science aspects, and really getting real business problems and going out and finding out how best to solve those. And a lot of that involves networking in the fintech community and the startup community. And so that's why I'm very involved in these types of ecosystems.
Everyone, and to close this round of introductions, my name is Elizabeth Becerril. I'm a regional manager for Latin America for all community teams within Techstars. And let's kick off this panel or this fireside chat talking about this year. This year has been very different from all others. We've had a lot of changes in the world and the industry and the behavior of the consumer. So I would like you to ask you, Tiago, what are the things that have drastically changed this year in fintech or in the industry, in the behavior of the consumer?
Yeah, well, it's a fascinating time. You can't talk 2020 without what COVID has been doing, and generally, we viewed it as an accelerant and a real tailwind for a lot of anyone starting a company right now. So, when I think of what's changing in fintech, let's go and ripple back to kind of like the US retail sales, which e-commerce was maybe 16% of that last year. Halfway through the year, it had already kind of doubled at over 30% of share. And that's just changing, having all sorts of ripple effects in the supply chain and obviously how we're paying for things and transferring cash back and forth, managing our money. We've generally seen it as an exciting time for startups. I think there was an interesting McKinsey chart that was equating it to roughly 10 years of acceleration within 2 quarters. So there's that spells opportunity.
Yeah, I would add to that. I think there is definitely an acceleration. I think there's an amplification in terms of what folks are doing and taking it to sort of new levels. And then I think the crisis and the environment has forced many companies, startups, fintechs, large corporations, etc., to be more creative in terms of how, as an example, you continue to engage with customers, and that is, likes of large corporations and leveraging much more of the digital channels and the platforms, as well as what we're seeing in sort of what I call everyday businesses, like the restaurants with the curbside pickups and everything else. It's just forcing companies to take a step back and be much more creative. I think the other thing I'd say on the acceleration or the amplification is there's this concept now of sort of convenience much more. I can speak in terms of financial services and sort of one button finance now, where wherever you are, you need it immediate right now rather than go into physical presence, etc. I think that side of it is not new, but as Diego had said, it's an acceleration that's happening, which I think is good opportunities for corporations. I also think it's good opportunities for fintechs in general and startups. We're seeing quite a few startup companies pivot right now based on demand, and hence going after new opportunities, adjacencies, and so forth, and also new entries coming into the market. Quite interestingly, a pickup there. So yeah, definitely an acceleration and an amplification, I would say.
I think to add, what I'm seeing more from a tech stack perspective is kind of three main areas where I'm seeing strong focus. I think not necessarily in order, but one, from a sentiment analytics perspective, people are really trying to understand more, use machine learning or forms of AI to really extract unbiased from large sources of information and get some form of sentiment view on how to interpret what's really going on around them. One of the other aspects I'm seeing a lot of strength in is behavioral analytics, to see how we are behaving in these certain conditions, how that affects trading, how it affects certain things. But of course, just generally as well, just machine learning, period. I think there's just lots more data coming at us. And while machine learning has always been popular, I think it'll be doubling down on it even more so now. And I think really the strength will come when maybe all three of those aspects come together and create really powerful products as well.
Yeah, no, I like what Dave said there, just that coupling of what's now rapidly changing and almost chaotic consumer behavior and desire and what they're purchasing and everything, just everyone's trying to rapidly try to understand that. And you got to use technology to do that if you want to do it in any sort of scalable or agile or rapid way. So you can adapt whatever you're selling or whatever service you have. So
what I'm hearing is that something that drastically changed. One, volume on transactions and everything. Second is market opportunities, that because all the panorama changed, there's an opportunity to build new businesses around these new circumstances. And third is technology is going to drive more the consumer behavior or vice versa. Like consumer behavior is going to change the way we think about technology, and we are going to be a little bit more conscious about what are the technologies that are going to help us to thrive in our business. So I would like to go deeper in those topics. Perhaps we can begin with market opportunities and specifically for fintech. So what, I don't know if in the changes that you have seen, Donnie, of the startups that are pivoting to the new models, that what are those things that drove that change?
Yeah, I think the opportunities for, if the question is around what's changed, and then the opportunities for companies, startups, and fintechs in particular, at least in our business on the asset management side, I would say one of the biggest areas is around, and I call it customer engagement, but it's more than just the engagement, but it is engaging with customers via different mediums, digital and so forth, but also the mix of intelligence now that, in quotes, salespeople and the like can leverage. So, the use of things like predictive analytics, machine learning in understanding the customer's behavior and that more. Those things we're seeing, like you said earlier, sort of acceleration on. It wasn't that they were, in quotes, new. Many companies were experimenting with those, but I think we were forced to take those to another level. And that's an area of opportunity because obviously, corporations building out those capabilities versus leveraging maybe some more nimble companies that are building that out. I would say that's probably one of the main areas of opportunities in terms of just sales and analytics, predictive analytics, coupled with engaging and meaningful engagements across different mediums and platforms with clients.
Is there any example that comes to your mind that would be good for the audience to share?
Well, I think you've got the classic that everyone is using. We're on platforms like this. We've seen platforms like, MS Teams have improved from a user experience, and then you've got Zoom that are improving from a security experience. So they're all sort of catching up to a level base. But if you look at some of the tools that are more marketing oriented that are out there, a lot of these companies are just pushing new capabilities now at a speed that they've never done before. Again, in now the next gen items like analytics and understanding your clients much more deeper. So I think it's those traditional tools that are starting to, like I said, get the like I said, we've and many of them are SaaS-based. We've never seen the likes of the new capabilities coming down and being released as quickly as they have been over the last period.
I was going to add that, Donnie, it's amazing now. You kind of need to be using SaaS services to a degree because the R&D that's being thrown at it to keep up with anything else competitors are doing, you just need to be consuming that from someone who is throwing that R&D and releasing those capabilities too fast. Because you really don't need the distraction to be trying to deal with that. Where the level of intellect comes is taking what they've done and then adding your intellectual layer on top of that and getting a competitive advantage. But you don't need to be dealing with that bottom 80% of stuff. You want to be dealing with the top.
Mm-hmm. Yeah. No, to add what Dave just said there is, I like to call it, that everything is a service economy where focus on your end customer and your true kind of differentiator, and there's this opportunity to start renting out the rest of your tech stack and everything to best-in-class kind of providers that you can connect right in via an API or something like that really didn't exist before. So there's this opportunity to just build new businesses very quickly or modernize your business really quickly. And in fintech, it's particularly interesting in kind of banking as a service, if you will, where some of the a little bit more base layer and boring companies that are doing things like connecting all the different disparate software packages and software solutions out there. So think of Plaid, which was helping kind of aggregate and connect to a whole bunch of bank accounts. Platforms like that are particularly to us at Engage and TSB from an investment perspective. The analogy I like to give is if there's a gold rush going on, there's a bunch of unbundling. I think a lot of us have probably seen some of the images where they'll show like the Wells Fargo website, and then all the different areas is being unbundled by different startups that are attacking different pieces of the business there. But what are the underlying platforms and enabling infrastructure for those startups and companies? Those are the ones that we're particularly interested in investing in. So things that connect across different kind of siloed ecosystems and to legacy B2B software that just slows things down. Regulation or regulatory as a service to kind of speed that up, because that can really trip up a early stage company is kind of an interesting area as well. That's kind of the things that I've personally been excited about, and COVID's just accelerating as well. So,
yeah, I would add to that. It's an interesting topic maybe to put out to Diego and Dave, which is, if you look at the fintechs, not to generalize of the past, but they what they typically have done is looked at the value chain of financial services and maybe picked one area of that value chain where, quite honestly, the incumbents have neglected, right? And then they go after that with a superior experience, right? And that's why you see a lot of them siloed. And then the challenge from there is, how do you scale that out? And generally, that's when you see a lot more partnerships between incumbents and the fintechs. And again, not to overgeneralize, but that is sort of how many of the fintechs come. I think, to the point Tiago made, I think we're on the brink right now, and I don't want to overuse the term that everyone's out there, which is embedded finance, but there is opportunities now for fintech companies to become those platforms, right? So especially in the API world we look at, if you believe that many areas of financial services can become utilities that can be plugged into many different distribution. I don't need to be a financial services company now to offer my customers the ability to open a bank account. I can go via an API, I can plug it in, and I can actually go offer it. And you're seeing that in the likes of Apple and Goldman and everything else. But if you just, and you're seeing that in banking, you're seeing that in payments, you're seeing that in deposits, you're seeing that starting to come up in insurance. So I do think there is an opportunity now for maybe a new breed of fintechs that are actually becoming these utility players that are allowing maybe non-traditional financial services companies to start to embed financial services offerings to their clients.
Yeah, that's a very interesting trend. Every company becoming some sort of financial services company because it gets them closer to their end customer at a higher engagement. So I picture retailers starting to do more and more of this. They already had kind of cards in the past. The big tech companies, like Donnie just mentioned, Apple, but waiting to see what Amazon and others kind of do there as well. It'll be a interesting time. So
it's an interesting time, and like I said, I think that is an area of opportunity. If I was maybe younger and looking to do a startup right now, I think that's quite a fertile ground.
I have a question to add to that. What we're seeing, some of these trends are kind of being driven by COVID, but to a large degree making our lives easier and more convenient. It now becomes a question, what happens post-COVID, dare we say? Do we think these trends will calm down, or do you think they will continue? Because I think we've kind of gotten used to this new way of doing things. I personally would like to continue that trajectory. I can't see myself ever going back to a lot of the ways I used to do things. So I don't know, Tiago, I was just curious what you were saying. Like, what do you think how that will go?
It may change the slope or the acceleration, but in many ways, I think a lot of these are irreversible changes because they're kind of heading in the way they were naturally already going. They've just kind of sped things up. Is the way that we've kind of approached it.
Yeah, I would say, just personally, my view is the genie's out of the bottle. I don't think it would go back. You just take a flexible work environment, right? People may call it work from home. You can call it many different things. Regardless what companies feel, I think putting that one back in the bottle is not going to happen. I think we'll see a new norm where, that in particular will have much more of a flexible global workforce. And I think there's many other areas that have been accelerated now that will not go back. I do agree that maybe the slope may change slightly, but I think the trajectory will not.
Yeah.
Something that, talking about this change, technology has been able to try to survive through this pandemic. And what are pieces of technology that we need to get better or take advantage in different ways to provide these services in this new era? We were talking about machine learning and artificial intelligence, but how or what should we be doing with those technologies in order to leverage this opportunity?
Yeah, look, I would maybe jump in just to set the tone and then see what others would say, because I think there is if I was again, I'm thinking of the audience, sort of fintech and trends in fintech and so forth. I think there is a core category of technology that folks may not see initially as the more out there in terms of machine learning, and although you can leverage machine learning, but it is an area that will be increasingly important and hence spend and hence opportunity. And that is on things like cyber security, disaster recovery, backup, all of those items that now are fundamentally quite different in this more flexible work environment. And I think the companies that have capabilities and offers to help corporations start to navigate how the new norm and how do I do those things in much more of a flexible work environment, I think that to me is a core and a huge opportunity. On top of maybe more some of the things people will jump to, which is, like I was talking about before, which is leveraging more machine learning and things like that in predictive analytics and sales engagement. But I do think there's core infrastructure and core technology that many corporations are going to have to take a step back and look for new capabilities as we go forward.
One thing I'd add is, when I'm working with startups, really, is I want to hear the problem that they are trying to solve before the tech stack that they are using. I think sometimes we're getting too caught up in it's blockchain, it's AI, and really that's less relevant. What I want to hear about is the problem that the industry is facing, how that problem relates to me, and that they are solving it and how. To be honest, if they don't mention blockchain at all, I don't care. I just care that they're solving the problem. And generally when I hear AI first, I zone out, because when a startup is generally coming and saying they're AI, I kind of don't believe them out the gate. And so I think just stick to the problem, stick to how you're solving it, stick to the differentiation you have. And if you're using blockchain, great. If you're not, that doesn't matter. That's kind of my advice.
Yeah. And one thing that, to Dave's point there about the problem, one other thing that kind of helps you, and I found useful as a tool for myself, just kind of trying to peer into the future, is just think about some of the, whether it's technology or not, but the services that are available. So if you think about wealth management, you think of some of the very sophisticated kind of portfolio construction and rebalancing and all this sort of stuff that's normally reserved for the ultra high net worth to really manage their money well. There's just this general democratization trend that tech is enabling, where a lot of that can, or it's historically been seen as something that a person has to do or anything, but tech is productizing it and making it available to more and more people. So those are really interesting areas, right? There's new asset classes starting to pop up to allow people to invest in fine art, right? Like, you don't want to put too much of your net worth in that, but the fractional ownership of a Monet might not be, the worst thing to just have a small portion of your net worth in. And that used to be something that was only reserved for the very few. So that kind of applies across a whole bunch of different areas outside of just fintech, but that's one to look out for as you're trying to look at future kind of trends and where things are going.
You say with these new models on solving problems, there's one layer that go across everything, which is our persona on the internet, like the security that has to be around all the platforms and the projects that we build in order to secure that these interactions are safe. So what is your take on cybersecurity and all that?
Yeah, so I can just speak from experience in terms of Invesco. That's been amplified during this period, both in terms of the capacity and the effort we have to it, as well as the increase in tools, etc., to monitor, as well as trying to navigate, unknowns. Just to give an example, just in the flexible environment we have right now, where folks are not in the office per se, but they're at home, right? Just the ability to manage the network from cybersecurity is just amplified from a risk perspective. And then you get bad actors in any time, but in these times there's an uptick in bad actors. that are out there, etc. So look, I would say, it's definitely a challenge. It's amplified. I don't think it's going away, and it's a hot topic for I would say every company, and particularly the large corporations that are more susceptible to the cyber attacks.
Yeah, I think from our side too, well, obviously security has always been front and center. I think definitely now more than ever, as Donny said, and I think more so now trying to move solutions through faster to help us decipher some of the things that are going around us. You just can't ignore the importance of focusing and doubling down on cybersecurity. So I think even when I'm partnering with startups, that is kind of in the top list of questions. I want to understand how that solution is going to secure us and make us stronger and not put anything at risk, if at all. And so now we know that we need to be focusing on this more than ever.
Yeah, and from a security standpoint, it's never been a better time to be a security startup. Yep. It's probably one of the frothiest spaces I can think of from a venture and investor perspective. You look at some of the companies going public and the multiples that are being placed on the valuations on revenue there are some of the very highest. Not too often you see 30x multiples and stuff like that on a company. And just think about what's happening. We talked about all these things before. You have all these different pieces of SaaS software and partners and everything that you're trying to piece together like Lego blocks. How do you manage keeping all of those secure? There's just so many more vectors. And just like we're working from home and kind of being much more distributed, there's just that general trend. We've moved from on-prem to the cloud, focused in one area, but now we're seeing basically systems getting more and more distributed. So you think of Docker and Docker swarms and all of that, and how things are kind of moving more towards the edge with the kind of IoT boom upcoming here, 5G. I'm just throwing out all sorts of buzzwords, right? But if everything is being distributed, how do you secure that? How do you manage that? That's the future, but it requires a whole lot of work on the security end and likely new technologies that can do it at scale. It's not going to be the legacy stuff that was meant to just put a moat around one thing. It's now how do you put maybe not even moats, but how do you secure 1,000 things at the same time instead?
Mm-hmm. So continuing with that, this being question before we jump to the audience questions will be like everything is shifting to the cloud because we are all remote and because we need to have more services online. So what is your perspective around these type of services and become, for example, Amazon being the leader there? What are your expectations for the future?
I can have a go at answering that. I mean, for me, it's similar to what I mentioned before with SaaS. And cloud gives people speed. It gives them capabilities faster than they can generally develop on-prem. And so for me, the cloud adoption is the same as why you look to using SaaS providers as well for different types of solutions. You need solutions at speed. You need things being offered to you quickly. And particularly now when it's new feature sets, machine learning, anything along those types of lines, cloud is where I'm going to find that over trying to build that myself. From what I said earlier as well, you can always use something from Amazon, for example, a SageMaker to get you somewhere with machine learning, and then use your own data science skill sets to take it to that other layer and make it truly private or give you that intellectual property. But it's that launch pad, that cloud feature that I fundamentally believe. Speed and capability.
Okay, thank you very much, Dave. And I make sure to answer the questions of the audience. They say that it's been a great session so far. So Marshall asked, could you please state again the startup opportunity based around providing value through a new front end to establish fintech players via the API? Okay, that's a long question.
Sorry, the front end, you just said, repeat the question? But
Yes, it will be more like what will be like the opportunity for fintechs that are already there to provide value to their API. Like, what is your perspective?
I could talk to that. Like, if you think of robo-advisors and everything, a lot of the established kind of players have long time had this issue where there's an acronym, I can't, like it was something along the lines of earlier in their career, not rich yet, sort of a thing, where the cost to acquire them based off of the value that they more immediately bring, just that cost equation never made sense. And there's just a huge startup opportunity. You've seen a lot of companies fill in where they're helping reach that tail end more efficiently, by using technology and the best software and sales stacks to have an automated or even better a viral way of getting people kind of on their app. And the back end could very well end up being more of kind of connections to legacy or kind of the bigger kind of financial players in the background, but you can kind of play that highly efficient customer acquirer that has been untapped, but a huge market in the past. Yeah, high earner, not rich yet. There we go. Henry's.
There's another question that I think a little bit connected that talks about is from Aaron Chavez, that says that it feels like in fintech there are startups that are over niching like the services that are providing. Like there's a specific startup for a very specific market or case of use. And what do you think about that? It's something good, or what is going to happen there?
yeah, look, I think it is good. Right? I would say if you look at, I've mentioned this before, many of the successful fintechs, it's because they've born, actually many of them have been born out of a frustration of their founder, right, initially. And they pick an area and they're very specific on bringing, quite honestly, a superior experience to that area. Right, and we've seen that in some of the startups in Brazil in the financial services sector, how complicated it was just to get an account set up, and then I forget the startup that started out there, etc. So I would say, for the most part, I would say that's a good strategy versus getting diluted and sort of chasing many different areas. I will say, I'll repeat again, though, I do think there is an opportunity now more so than ever on these platform plays. Again, going into sort of embedded finance. You've seen this in telecommunications with Twilio that happened maybe 8 years ago, etc. We're starting to see that more and more in banking, in particular, with like Railsbank out of SoFi. So I do think there is a trend now in financial services for a lot more of these utility players that do allow to go across. But that is more of a B2B2C. As opposed to a B2C. I think the B2C, to be very focused on a particular area of the value chain and like I said, bring a superior experience to that, is a good way of starting and then finding your adjacencies afterwards.
Yeah, and on that point, a lot of times that hyper focus and just being really good at that problem, you end up figuring out all sorts of, like, you're verticalizing the stack and you're figuring out all sorts of issues on the back end. So if you think of, hopefully I'm not mentioning the wrong names here, but like Betterment and Robinhood, for example, they may have started originally with working with what's called outside, like a custodian bank that would help them. And through their learnings, they ended up in-housing and building their own. So in many ways, I've been waiting to kind of see where these companies that initially go vertical start offering that custodial banking service best in class as an API or something out to the rest of the world. So all these startups have something that really solves the pain that they know intimately themselves from trying to work with others and everything, and how slow it was or whatever it is. Some of the small things can make all the difference there. So that vertical to platform transition is an interesting opportunity for startups, because platforms can sometimes have a chicken and egg problem. How do you get it started?
Yeah,
that's one way to solve it.
Yeah, I can't stress that enough too. Is like, as we said before, it's that problem and going so razor focused and deep on solving that problem. And the reason is, as Donnie said, we've got this value chain, and there's parts of the value chain, if someone's just focusing on it and putting all their resource on it, they're probably going to do a better job in that particular part, and we'll partner with them to consume that service, because it doesn't make sense for us to do that. Where we generally will lose interest when someone's coming in trying to boil the ocean and saying, we can do this, we can do this, we can do this. And it's like, when someone can really talk to your problem and go so deep into your problem and have such expertise to solve it and have such a superior experience, is when you want to partner. It's when people start bouncing around and being able to claim to do everything, you start losing confidence that with limited resource they can.
Well, we're about.
We'll see.
Yeah, I have a problem with my camera. I'm back. I want to shift a little bit the topic about the unique position of Atlanta. I know that this is a really important place to do fintech and in general business. And I would like you to share a little bit about what do you think is the unique position on Atlanta.
So yeah, look, maybe I'll start and maybe admit I'm biased to Atlanta. Invesco is very proud to have our global headquarters here in Atlanta. We've been here for over 15 years now. We're committed to Atlanta from an innovation standpoint. We've taken innovation space at Coda, some of our partnerships with companies like Engage, etc. I think there's a couple of items if you look at Atlanta. Number one, we all know the logistics and transportation hub that's here. We all know that it's been the number one area for payments and so forth coming into Atlanta. But there's a lot more access to capital for startups now, through the likes of Engage and other entities like that here. You've got the academic community with the universities, etc. It is a very vibrant startup community here in Atlanta. And I would say probably one of the most important as well. It's a very diverse population in terms of diversity here. So I'm biased. We're really excited to be a part of the Atlanta scene here and be a part of things like this as well.
Yeah, one thing a lot of folks will forget is the Intercontinental Exchange is also right here in Atlanta. Yep. They own the New York Stock Exchange. That's an Atlanta company, right? And they're also a partner at Engage. And I'm also biased, but having been here the past 5 years and just witnessing kind of the transformation and the growth, there's more capital. There's just so much is changing in the right direction. And there's also the third highest concentration of Fortune 500s right here. So all of the right parties to start putting volume on payment rails, also, anything you can kind of think of from that fintech perspective, especially if you buy into the thesis or what we were talking about earlier of every company becoming more of a fintech company, right? So names you would never imagine kind of really being involved in financial services, getting involved, and frankly wanting you to simplify their world for them. They want that as a service or as an API. That they're not going to be getting into the business of becoming a bank. So it's an exciting time for Atlanta.
Yeah, I could add briefly is that I think not to forget, I was looking at it recently. If you think about everything Atlanta's been going, but you can see why it continues to grow. I'm also biased for Atlanta. I moved there 3 years ago after having lived and worked around the world. I suppose in Atlanta as home. But if you look at it from a diversity perspective, time zone perspective, connectivity perspective, time, cost of living, it just has so much benefit to keep continuing to attract business, and it just continues to be a great place to network. So that's just a lot of benefit.
Okay, we are about to wrap up this chat, but I think that the question of the million is like, what would you be the trends for 2021? Like, if you had to bet on something, like for the next year? I know we cannot be the uh, know the future for certain, but if you had to bet for something, it would be a technology, a business model or something, what would it be for the next year?
Yeah, I would end and say, for me, it's all the services that go around to a much more global, flexible work environment.
For me, it's that continuation of convenience and removing friction and kind of, I don't know, word for independence is not it. What we've learned through COVID is people wanting to be able to do things from the palm of their hand, it to happen quick. But that's to scale now with the embedded finance you mentioned earlier, being able to make predictions based on data, being able to guide me. That is just kind of where I see things needing to double down, or will continue to double down.
It may be a large acquisition from one of the top 5 tech players that kind of surprises people. Just why the heck are they doing that? That really kind of gets them closer to their customer and just touching that end customer more in the end. I could see something like that happening.
That's a good one.
Yeah,
that kicking off a whole lot of other activity once people see that model.
Yeah,
the power of a big tech going into something like finance, traditional finance, would be immense.
Yep, and a lot of great engaged investments.
Good plug.
Thanks. I got reminded. So on that end, I have to plug and engage. You can reach out to me and the team, Tiago at engage.vc. We're always on the lookout for awesome founding teams and fintech. We love it. So we'd love to hear from you.
Hopefully reunite next year to see if all that bets were accurate. I just thank you very much for sharing your knowledge on fintech trends. And please, to the audience, connect with your community in Atlanta, with Engage, with Tech Square Ventures. There, something really unique about Atlanta is that the ecosystem is collaborating with each other. Something that is not seen as often in other communities around the world. So take advantage of that. Thank you for joining. Remember to keep posted on all the things that our actors are doing. You, for example, can go to the Invesco booth that is here in the virtual expo. You can know more about the opportunities that are for startups to connect with Engage and also career opportunities there. So thank you very much. I appreciate your time. Hopefully we can meet again and see what are the trends for the next years.
Yeah. Enjoy this.
Thank you.
Thanks for having me.